I'm joined now by Manish Kumar, who's co-founder of Grex and Realx, to get some perspective. Hi Manish, thanks for speaking with us. Can you explain to us exactly what's going on? From what I understand, a lot of people who have accounts in crypto platforms or crypto exchanges can now sell their holdings but can't really add money to their accounts to buy more holdings. Is that what's happening right now?
Yes, so you reported correctly. This is something that in the industry circles, we were anticipating that something, as a payment squeezing part two might come around from, it may not be this time directly from the regulator side, but there may be a payment squeezing coming around, and that is exactly what is happening. So there has been a withdrawal of payment services in general, whether we talk about wallet services, whether we talk about NPCI, all of them, are regulated entities, and I think there's a play to restrict, monetary fiat money transactions going into cryptos.
Now, so where does this lead people who have accounts right now? If they're restricted from trading, so that means there's only one way out, which is an exit from current holdings. They cannot buy more.
Yes, so the exit window is still open. So if there is, on the one hand, the government enabled taxation, so they wouldn't want the tax income that they probably envisage also going out. The exit window is definitely open. But I think the intent behind this payment squeeze, as I call it, is to now deter any more infusion going into crypto markets.
Already volumes have dropped drastically after the announcement of the tax and the clarification of no offset, the TDS, etc., which kicks in from July. So anyway, volumes are down. What is happening after this further sort of payment squeeze, as you call it? And also, if I may ask, is there any official communication, notification why this has suddenly happened?
No, so this time around, I think you have all the entities have gone smarter. I guess the regulator also knows, that they cannot play a direct hand given the Supreme Court verdict last time. But I think there is a general understanding that we need to stop this, and they are doing whatever they can by, slowly impacting the services offered. So yes, the
Industry
investors
then.
are.
Isn't this an end to the industry? If nobody can buy anymore and the only option is to slowly unwind from your positions, isn't this pretty much an end to the whole crypto craze? How is this going to grow then?
Not really. I mean, see, the peer-to-peer transaction window is still open, and what is worrying about all this from the customer side is we might be squeezing their formal mechanisms to invest, and in that process, we are exposing people to transact on a peer-to-peer basis. Now, when you do transact on a peer-to-peer basis, you run a huge amount of risk of the transactions being of the customer, of the buyer being defrauded. And unfortunately, the intent might be good, or at least in their view, it might be good, but they might be exposing a whole lot of crypto enthusiasts to an alternate route of payment, which is peer-to-peer and which is fraught with a lot of risk. I think a more judicious process would have been better. And all this is really emanating from government not really taking position yet.
Okay, at least some clarity is required for those who are invested and for the industry, that what exactly is the rule right now and what's happening. Thank you so much, Manish, for joining us on the show and giving us a sense of what's going on.